Are open for trade. Slightly different board this morning. We've got Italy out of action for Assumption Day, Christian holiday. What we do have, though, markets that are trading, picking up on what was mostly a strong run from those big technology names stateside yesterday. The FTSE here at this point, another challenging piece of data to wade through. That on the wages component, the boosted number here, 8.2%, much firmer than the market had anticipated. Again, putting pressure on employers. At this stage, though, the other big factor in the room is China. Don't forget we've had downbeat news, and of course that is a challenging picture again for commodities. So the commodities heavy index of the FTSE tracking down by about 0.1%, giving us a choppy chart. We've got to the French market trying to lean positive, scooping up about 4 points early on. Yesterday it was up about 0.1%, third positive session in 4. So again, trying to reach for a bit more green. In contrast to the DAX, that is now flipped red. Not much downbeat news, as you can see, just a little bit of slippage at the start here. It was one of the better performers in trade yesterday, up almost 0.5%. So it starts out slightly more cautious note this morning, and you can see the IBEX out of Spain also flatlining at this point. Let's get into that FTSE 100, and you can see how the bulk of stocks are opening up as we get going this morning. We've got a little bit of green, AB Foods, Anglo American, Rio actually in the resources space, offset by a little bit of red, BATS, British American Tobacco, WPP, all starting out in negative territory. But Steve, you're diving into one of my favourite series of data, actually. I really like the Kantar numbers and what they tell us about market share and inflation numbers.
Yeah, and look, the key number here is that UK grocery inflation has fallen to 12.7% year on year. In the 4 weeks to August the 6th. So UK grocery inflation, which was 20%-ish or higher in some cases, fallen 12.7%. And so that combined with the fact that you've actually got an increase in wages in the data we had about an hour ago makes it the cost of living crisis just calming down a little bit in the United Kingdom. UK grocery sales, though, up 6.5% year on year in the 4 weeks to August the 6th. Very briefly, Tesco sales up 9.5%. J. Sainsbury sales up 9.3%, Aldi up 21%, Lidl up 19.8%. So by and large across the sector, the grocers enjoying greater sales, but the inflation concerns on groceries still there, 12.7%, but way lower than it has been previously, Karen.
Just to pick up on that, don't forget we had a stronger wages component today that has crossed, so that should be good news for some of these retailers. The inflation number clearly a bit of an issue, but you can see a very mixed reaction across the space today. We have barely moved on Tesco, we're down on Sainsbury, but it is M&S that's well and truly out in front. We just saw a 7% plus handle. This as we've seen a profit upgrade this morning from the British retailer, so the stock is certainly on the move today. Now let me take you to the DAX. Let's see what movement we have now on the German stock market. It is not straying too far from the flat line. That red giving way to a little bit of green, but again, not a huge amount of movement at this point. Big name movers like Siemens to the upside, Deutsche Bank, Volkswagen, all moving positive. And we've got a little bit of red, though, in the charts. Bayer towards the bottom. SAP also just tracking a little bit weaker. To the French stock market, and this is how we're travelling, a 7348, right on the flat line. The green offsetting the red at this stage. To the top, the likes of Renault, SocGen, some of the better improvers at this stage, offset by some weakness elsewhere. Publicis in the red, LVMH, the big luxury player, tracking weaker. Danone too from the food space in the red. The latest Chinese industrial production numbers and retail prints for July added to the country's economic woes. Both slowed on the month and came in well below forecasts. Industrial output expanded by 3.7% on the year compared to an expected increase of around 4.5%. So retail sales only just rising to 2.5%. That was their slowest pace since December. Meanwhile, the central bank in China, the PBOC, unexpectedly cut its key rates by their steepest level since 2020, including slashing its one-year loan rate by 15 basis points to 2.5%. And you can see mixed story out of some of those big resource names today. Rio to the upside, downside on Antofagasta and Glencore. To the big luxury names picking up on that retail sales print, and I mentioned LVMH showing us a negative hand this morning, down a tenth along with Hermes. Richemont down 0.4, Ferragamo weakening. A little bit of green though, patches of green around the likes of Kering, L'Oreal and Burberry. To the big autos, and this is how the sector plays out. Mostly positive, only slight green, though, as you can see, for some of these names. The exception Ferrari, that has raced ahead, and of course that's a ticker race. It is up 1% at this stage. To the jobs numbers out of the UK, and I think this is fascinating. All sorts of different reactions. Some seeing the glass as half full, others seeing it half empty at this stage. UK wage growth ex bonuses hit 7.8% in the 3 months ending June. That is the fastest growth rate on record, and just 10 basis points shy of June's CPI inflation print. Analyst poll by Reuters had earmarked a 7.4% rise for the period. The strong reading puts more pressure on the Bank of England to try and rein in inflation. Sterling climbing this morning, 127.10 at this stage. Look at those yields at the short end of gilts, the 2-year 5.11, where we're now travelling at. So we've lifted it this morning, 4.61 on the 10-year. And a look at the banks weighing up this story as well. You can see Barclays and Santander both just eking out slight gains versus a little bit of red materialising for HSBC, down 0.6%, Standard Chartered down roughly 0.2. Speaking of the banks, UBS has agreed to pay $1.4 billion to settle charges in the US that had tricked investors into purchasing distressed mortgage securities in the run-up to the 2008 global financial crisis. That's right, a real legacy legal issue here. The latest development wraps the final case filed by US prosecutors probing the Swiss bank's conduct and could pave the way for a dismissal of the lawsuit. The bank, which acquired rival Credit Suisse back in June, says it has already made provisions to cover the payout. And to Covestro. Shares in focus on reports that ADNOC will increase its offer for the company to €60 per share versus the 48.77 on market today, a bid that represents a close to 30% premium on Covestro's closing share price Friday. The previous offer of €57 per share was seen as way too low, according to company insiders. Multiple media reports state that the energy giant's verbal offer is being considered by Covestro, and a response could come later this week. Steve.
I'm just